All right, folks, just moments ago during the break, we hit bear market territory officially for the Dow Jones Industrial Average. That's any time an asset or an underlying stock or index like the Dow Jones Industrial Index goes down 20% from the high. They will officially score it at the close, but as of this moment, the Dow Jones Industrial Average has entered bear market territory. I want to bring in Mahoney Asset Management CEO Kim Mahoney, get his take on this, and also what it will take to restore confidence and stability in the stock market in Main Street. Ken, I feel like it's almost chicken and the egg at this point, because the more the market goes down, the less stability you'll have on Main Street. The less stability you have on Main Street, the more vulnerable the market's going to be.
Right, it's that vicious cycle. Remember, we had the wealth effect going up, and people felt good about it. They go out and make those big purchases. How about people looking at their 401k statements on a regular basis? Now, remember, we used to see them once a year, quarterly. Now we're looking at these things on a daily basis, intraday basis, and we see those accounts going down. It does take some wind out of our sails as consumers on the other side of it, which you don't want to make those big purchases. And then you add the coronavirus, that uncertainty, yeah, people are really pulling back into spending.
What do you make? Okay, so, you know, the bear market, right now we got a little bit more to go for an S&P and NASDAQ to get there. You know, I hate the structure of the Dow, which I'm not surprised it got there before the other indices. What does it mean for investors, other than maybe a trivia question somewhere down the road? Does it signal for you more weakness, more vulnerability? Does it signal for you perhaps we're getting oversold?
It's hard to say. Look, everybody keeps asking, is the market, like, is this overdoing it? Is this too much? I think the market's getting it right. It's trying factoring all the different dominoes that fall when you have everything that we have. Look, the first 10%, by the way, of the 20%, had to do really more with you know, the frothiness that we had. We went straight up, low volatility, setting records. So the first 10% was really just taking up the frothiness.
Yeah. It was overdue.
Now the next 10% is clearly trying to figure out those companies that have warned already. Apple warned, Microsoft has warned. A lot of companies have not warned yet, but the market did it for them by cutting their price.
Big news this morning out of Goldman. One of their top analysts said the bear market was going to be over. But one thing that the media hadn't reported is in this same report, this analyst, Costin, sees us rebounding mid-year and actually closing up. The S&P at 3,200. So we go all the way down to 2,450, and we go
shake everybody out,
and we go back up to 3,200. I mean, is such a scenario possible if indeed what we see here is people being shut in? It's really stalling, postponing, canceling the economy for 2 weeks to a month that we're talking about, and how much long-term impact that should have on the economy.
Right. By the way, if it is a scenario 2 weeks to 4 weeks, yeah, we could get going. I'm not sure about 3,200, but we'd have pent-up demand on the other side of this. The problem is, you know, each day it goes on, the more people or more facilities that get these
feeds on itself. So you're not doing anything in this market right now. You're
doing quick flips.
But other than that, your main long-term investors, are they staying the course?
Yeah, staying the course. Okay. Again, stay with technology. Technology was a leader before the coronavirus. Once we get out of this pickle, out of this mess, I believe technology will be the leadership.
Ken Mahoney, thank you very much. Appreciate it. The Dow again hitting bear market territory. This is the coronavirus is now making paid sick leave. This is going to be a major issue in November. Also, Joe.